Oh my god. Yo, what's going on, ladies and gentlemen? My name is Dodgy. I'm not a financial advisor. This is not financial advice. If you want to watch my live streams every single day, just click the WAP link in the description below. In December, I'm probably going to raise my price from 35 a month to 50 a month, so would recommend getting in before then. Again, really good live streams. Depends on the stream whether I scalp or try to hold for 70-point play. Like today, I held for a 70-point play. So just depends. Okay, and usually just live trade. So yeah, and then the other thing is there's a 90% off sale on Apex. I did cop a few more accounts. I've been testing other strategies, so if you want to get an account just to test out some other strategies, I definitely would say it's worth it, especially for the sale now. And yeah, so let me know if you guys sign up. Okay, maybe I'll give a secret surprise to someone who does. So yeah. All right. Today's video, I'm going to be going over like what inversion I like to use. Okay, so if you watch the basics of my inversion strategy, okay, there's times where I'll use like random inversions where people are like, "Well, why do you use this?" Okay. And I can't really explain, but I'm going to try to do my best to explain in this video. So the first thing I like to look for inversions is I like for it to be a single inversion. Okay, so I like it for it to be a single inversion. So what that means is if we, this is a single inversion because there's no fair value gap here. Okay, let me just go. But there's no fair value gap here. Okay, no fair value gap until up here. Okay, now this is the same leg, however. So see how from here to here, this is the same leg. So this is the same leg. However, I always say don't take one with two fair value gaps on the leg, but this one you can. Why? Because in between this fair value gap and this fair value gap is about 10 points. So let's say you long this one right here, which this one actually did get stopped out, but let's say it didn't. Okay, let's say you long this one right here. All right. By the way, I'll explain why I think this played out like this. You're probably wondering why this was a loss. I did demo trade this because I was up like 70 points in my live here, so I just demo traded this, but I'll explain in a second. But this is a whole single leg, and I say don't take play if there's multiple fair value gaps in the same leg. So, but why is this valid and why is this a singular one? Because this is a singular one until this one, which is about 10 points higher. So what I like to say is you can take this one and then your first target or your first break even would be here instead of here. Okay, does that make sense? Okay, and that's only if there's multiple in the same leg. If there's multiple right next to each other, then I don't take it. Okay, I mean, sometimes you can take the last one. Okay, but even though there's two in the same leg here, you can still take it. Just move your stop to break even or whatever when we hit this, because there's or scale. What I would recommend is probably scale when we hit that. But this obviously wasn't the cleanest. Okay. So just remember, if there's a fair value gap, but there's two in the same leg, you can play it. Make sure they're a decent far away from each other though. They cannot be right next to each other, because let's say there was a fair value gap here and a fair value gap here. Would that risk reward really be worth it? If you know we're at least going to hit here, that's not a good risk reward. I want to know we're at least going to hit here, this internal liquidity. That would give me a little better RR. Okay, so that's the thing with that. Now, why did something like this get all sloppified here? Okay, I know that's not a word, but look. We have a clean fair value gap here. We come down, test this, close under it, and then we close back above. What is that? Is that logical in price? No. Okay, you want to see the bodies respect this. Okay, this was not logical to me. Okay, and because this is not logical, why would this be logical? So that was the other reason why I demo traded this, because I saw us close under this, but we went back up. So I was like, okay, this is definitely pretty sloppy. If we're delivering for somewhere really sloppy like this, see how this is like a sloppy delivery where we close under and above, you're gonna often see like the next inverses to be sloppy and deliver sloppily. So like sometimes I will account for a bigger stop loss if that's the case. So I'll like do this or whatever. And that's just what you gotta realize. Okay, if we're delivering from somewhere very, very messy, such as this, okay, then just know the next play might be like that too. It might be sloppy too. Okay, so just keep that in mind. Now, the other thing I like to look for is not this. Okay, so this is an example where there's multiple in the same leg. See how they're multiple right next to each other, like literally stacked on top of each other? Well, how do you know which one to use? You don't. So I just don't touch these ones. Sometimes, okay, sometimes, all right, look at this. See how there's this one, and then this one, this one, this one, this one. This is the highest one. So sometimes if this does line up with another fair value gap, which this was a 2 minute, I believe, or something. Let me, 3 minute. I don't, might be a 3 minute. Yeah, it was a 3 minute gap. If this lines up, the last fair value gap on the last fair value gap or the most recent fair value gap formed on the come up to buy side, which you can see buy side was these equal highs up here. Okay. Right here. So that most recent fair value gap that we get, that not these ones, but this one, because this is the last fair value gap we got before hitting buy side. I know there's multiple in this leg, but sometimes you can get away with taking these if it lines up with a new fair value gap that forms to the downside. Okay, so that's the only exception to these. But other than that, I don't touch this because there's too many here. Now, what you can do is you can scalp here. When we close below here, you can scalp to the next fair value gap, which the risk reward's horrible, so why would you do that? But that's why I don't like taking the same in the single leg, because look, if I want the low and I want to close and I want to short when this is closed below, well, I'm just running into another fair value gap. But let's say these weren't here. Well, then if I short this, I'd expect this to go much lower. So these fair value gaps, to me, you could scalp short this, but this isn't far away enough for me. Like, I would want it to be down here if there was two fair value gaps in the same leg, because at least I could get a little more points. Okay. Now let's look at another example. This is another example. So this actually wouldn't look bad, except what? Okay, it's not one I take because you can clearly see right here, right? We took this low. And whenever we take a low and then get another inversion to the downside, I don't trust them. I know sometimes they do work, but make sure we're not taking a low. Okay, make sure we're not creating low resistance liquidity. Okay, or make sure we are. Make sure we are taking low resistance liquidity or building up low resistance liquidity. This is high resistance liquidities right here. When we go up while taking lows, okay, that's high resistant because this was already taken, this is going to have a much less shot of being taken. So that just makes this invalid for me. Even though we were delivering from this fair value gap, I know it still looks good, but it wasn't because of liquidity. So that was two reasons. Like, another one is, let me see if I can find that one. Right here, this is one I would like. Why would I like this one? Because we have a low inside of a fair value gap here, and literally in this whole entire thing, okay, I would prefer this one. Not even this one, to be honest. Like, I know some people are like, why won't you check this one? This just looks so obvious, okay? It's always the obvious ones that I like to use. Okay, this doesn't look obvious to me. It's this one that looks obvious. So I wouldn't mind taking this to this low if this is inversed, okay? If it's an inversion you can back away and see far away from your screen, it's probably a good one. In my opinion, like this one was a good one right here. Okay, to be closed under and the one. Okay, you can see where you tested it, body's held, and then again, same thing. Even though the low's down here, you only want to target this fair value gap because, again, if there's two fair value gaps in the same leg, you're at least gonna know it's gonna go to that next low / fair value gap, and you can see they definitely lined up here. That would be a short to here. You'd scale half and then get stopped the rest of break even. Let's see if I can find one more. So like another example of one that I might not take would be like anything formed in here. Okay, not even this one. I know this works, but like in this leg, obviously I would not touch anything here. Okay, you're gonna see a lot of fails. But as soon as you start seeing barcode price action like this, you don't touch. Simple as that. There's that. Let's see. This one right here, okay, why would I not like this one right here? Because we took buy side here, right? Even though we barely swept this high, we still swept it. So this is just one I would have trust issues with. I like to see us not sweep this high. And again, you can kind of see we did make equal highs over here, but still not something I would trust. Let's see. This one would have been perfect if it was played to the downside. Why? Because if you take one look at this chart, what are the two most obvious fair value gaps? This one and this one. I guarantee you nothing else is that obvious. Okay. just quickly close your eyes. I want you to quickly close your eyes, open them, let you just look at the chart as a whole. What are the first two fair value gaps you see? It's going to be these two. If it's any other two, you need more screen time. It's going to be these two. We have like these tiny ones like here and whatnot, but these to me are the obvious ones. These just look so obvious. So again, these two would have been great. However, this one you would have only taken it down to this low. Okay, this one you could have taken it down to this low. So again, if you can close your eyes, open them again, and kind of look at the chart as a whole, the first fair value gap you see is generally the one you probably want to use because it's going to be the most obvious to the naked eye. And I just think those work the best. If it's not obvious, then don't take it. A lot of bad price action here. Same thing with like this. Okay, if I open my eyes, like this one to me would be just super obvious to take. Okay, now this one fails. Okay, but it actually, there was a valid reason for this. So the last thing I'm going to say for the inverses that I like and don't like is this. If you have a 1 minute fair value gap and it lines up with a 2 minute, so let me just draw a line here. It lines up with a 2 minute, which it does. Okay, and it lines up with a 3 minute, which it does. Okay, 3 minutes right here. And it lines up with a 4 minute. If it lines up with a 5 minute, yes, it does. Does it line up with a 15 minute? There's none on the 15 minute. So the highest time frame we get this on is the 5. If the 1 and the 2 and the 3 and the 4 and the 5 match up, you want to see that 5 minute break. I don't care about the 1 minute, and that's why that one failed. So that's another good gem. Okay, if you see a fair value gap lining up with another time frame, wait for the highest time frame when the break. If you're really, really confident in the bias, can you take that 1 minute? Yes, you can before the 5 minute inverses. But if you're not confident, just wait for that 5 minute to break. I know you sometimes won't get entries, but that's going to be the way the cookie crumbles. So, again, this is another obvious one that I see. Also, the ones I do like using are the ones that get respected on the long side, because that means if you get to the short side, they'll probably be disrespected or respected again to the downside. So that's another one. But yeah, that's basically a summary of what ones I like using. I think the biggest thing to take away from this video is you're going to need screen time, and you're going to need to open up your eye. Which fair value gaps seem the most obvious to you? First 10 seconds looking at the chart. Those are the key ones usually for me. And again, you're not going to get this down perfectly after this video without screen time, but just hopefully this accelerates your learning curve a little. Let me know if you have questions. Thank you guys for coming and watching this video. I appreciate all of you. Like and subscribe if you did learn something. And again, this is not a super organized video. Why? Because there's going to be so many different examples, right? There's going to be so many different examples. I can't just, half of this stuff is screen time. Half of this stuff I learned for myself for screen time. Some just look good, some don't. So just remember that. All right. So don't give up. Okay, you got this. You just need more time if you're struggling with the inverses. But let me know if you have any questions. Other than that, make sure you watch my strategy video, because I go over a lot more inverses examples and stuff in those videos. Maybe rewatch them a couple times. And yeah, other than that, I'll see you guys later. Peace.